Good day, students. I will be doing the review question 2.2. The B&B Company. The B&B Company manufacture prefabricated garages. There are two distinct production departments in their business: toiling and assembly. There is also a canteen which is used by both production departments. You have been provided with the following financial information. The indirect cost. The indirect cost for all the three departments is given below in total. We are given the indirect labor, the indirect material, power, rent of the premises. We are given depreciation of machinery and equipment. We are given salaries of supervisory staff, and we are given heating and lighting. Then the total of all the overheads is 466,000 rands. Other information relevant to each department is as follows. Then we are given the floor space. Then definitely these are the bases that we'll use to allocate our overheads. We have the floor space that is used by toiling, assembly, and the canteen. Number of employees in each department is 40, 80, and 10, and the total is 130. And the total of the floor space is 460, or is 46,000. Then the value of the machine is 500,000, being 300,000 and 180,000 and 20,000 value of the machine that we have in all the three departments. Then we have kilowatts of electricity or kilowatts of power, which is 20,000, 10,000, 9,000, and 10,000 to all the departments, and the total is 20,000 in all. Then we have the number of labor hours, which is 24,000, 8,000, 16,000, and there are no labor hours under the canteen in this case. Then we have direct labor cost, total 160,000, made out of 64,000 and 96,000. That will give us the total of 160,000 direct labor cost in rands. Then after we have direct material cost of 140,000 rands, which is the total of 75,000 rands and 65,000 rands. And there is obviously no direct material cost in the canteen because the canteen is not a production department. Then after the production of the garages is assigned and a cost using the job costing method. Two types of garages are produced: the standard garage and the Gulex garage. So now these are the two standard garage that are produced by this business, the B&B Company. And we are given the information for these two garage, the standard frame and Gulex frame. We are given direct material per unit, and this direct material is in rands. And we are given Gulex frame of 1,500 of the cost of the material that is needed to complete this garage. And we have 1,000 of the cost of the material that the business will incur to complete the standard frame garage. And we are given the direct labor cost per unit, and we are told that there are 15, or it takes 15 hours to complete one garage of standard frame, and each employee who is working for or completing the standard frame garage is paid 100 rand per hour. And it takes 20 hours of labor to complete Durex frame garage, and the laborers are paid 100 rand per hour. So now that is the direct material cost as a rate and the number of hours it takes to complete the garages. Further, it says you have recently been appointed by the B&B Company as their management accountant, a role that did not exist previously in the company. So now this is the new position for the new candidate. The first requirement that is given, or duty that is given to this new management accountant, is shown in 2.2.1, and it says, show the apportionment of production overheads cost for each of the three departments: toiling, assembly, and the canteen, using an appropriate apportionment basis for each department. So now, in simple terms, we are required to allocate all the overheads that we have to all the departments that we have, being toiling, assembly, and canteen, using the basis of allocation that are given from the second table, this basis of allocation that we have. Then now we allocate through all the departments, including the canteen being the service more like department. Then now we have to allocate all these overheads. Remember, these are the overheads that we have from the indirect labor up until the heating and light. Then we'll have to do that allocation as it is instructed. So now I have the table that I've already prepared for you, and in the table I only have to write indirect overhead, which is indirect. First overhead is the indirect labor, then after we have indirect material. Then I write indirect labor, and our indirect labor, remember I already have all the columns for all the departments. Total, then we have toiling, we have assembly, and we have canteen. Toiling as WO, or tooling, sorry for that, is WO. Tooling department. Assembly and canteen. Then we have indirect material, so now our indirect labor, we have to check which base will be relevant to allocate the indirect labor. Then the indirect labor will be allocated using the base, which is the number of employees. If we have the number of employees, then now there we have the 130 total number of employees. Remember, these are the indirect labors. So now the more indirect labors we have, the more cost will be incurred in terms of indirect labor cost. So now that is why for the indirect labor cost, we are using the number of employees that we have. Then for this department, tooling is 40, and assembly we have 80, and canteen we have 10. However, if it was given to use another overhead, then we'll still use another overhead. So now it means the base to allocate the indirect labor cost will be the number of employees. Then the number of employees, that will be the base, and the total of the indirect labor cost is an amount of 85,000 rands. It is an amount of 85,000 rands. Then now we have to allocate the 85,000 rands to all the three departments. So now we have to calculate the rate as usual. Then we calculate indirect labor rate. The indirect labor rate will be the total labor cost of 85,000 rands divided by the total base. The total base, remember, is the number of employees, and the number of employees is 130 employees. Then we divide by the total of 130, and we will get to our overhead rate or indirect labor rate. Then 85,000 divide by 130, it will give us 653 rand 84 cents. 653 rand 85 cents. Then we allocate this to the first department, and the first department is tooling with a total of 40 employees. Then we say times by 40, then this will give us 26,154. 26,154. 26,154. That is the allocation of the indirect labor cost to the tooling department. Then we allocate to other departments. We start again. The same method, 85,000 divide by 130 equal. We multiply by the number of employees in the second department, and the second department is assembly department with 80 employees, times by 80. That gave us 52,307 rand 69 cents. 52,307 rand 69 cents, which is 52,308. We just round off to the whole number. Then we do the same thing for the next one, where we say 85,000 divide by 130 equal, multiply by the number of employees that are in the canteen department, and the number of employees is 10 in canteen. Then we multiply by 10, that gave us 6,538. 6,538. 6,538. So now that is how our indirect labor cost is allocated using the number of employees. Remember, when it comes to indirect labors, you can also use direct labor hours, because direct labor hours will also be relevant as a base to allocate our indirect labor cost. However, sometimes you'll get to be marked if you use a base that is also relevant or close. However, we decided, or even in the memorandum, they have used the number of employees as a base to allocate indirect labor cost. Then now let us go to the second overhead, which is indirect material cost. And the indirect material cost will obviously be in the proportion of the material, which is the direct material. So the indirect material cost is 95,000 rands. 95,000 rands is the total of the indirect material. Under total, we write 95,000. Then the base to allocate this will be direct materials. So this is indirect material. Obviously, the base will have to be direct material. And we do have direct material that we have, because the more direct material we have, the more also indirect material will be needed to produce a product. And our direct material is 140,000 in total. That means we have to divide by 140. And for department tooling is 75,000, and for the assembly department is 65,000. And there is no direct material for the canteen because we don't produce in the canteen department. So now let us do the allocation of the indirect material, where we have to have the indirect material rate. Our indirect material rate or overhead rate is equal to budgeted overhead, and the budgeted overhead of material is 95,000 rands divided by the base, and the base we said that it will be material cost. Then the material cost that we have in total is 140,000. Then we divide by 140,000, divide by 140,000. Then this will cancel that. Then we'll get to a percentage definitely. Then that will be 95,000 divided by 140,000. .678 continues. Then after we allocate in the tooling department, we will see 0.678 times by 75,000. Then we say times by 75,000. We get to 50,000. We get to 508.92. We get to 508.92, which can be rounded off to 93. 508 50,892, which is 93. So now this will be the allocation to the Department of Tooling. Then we allocate that amount in the tooling department. 50893. Then we do the same thing for the second department. We say 95,000 divided by 140,000 times by the total of the direct material cost for the assembly department, which is 65,000, times by 65,000. That gives us 44,107. 44,107. 44,107. There is no allocation for canteen. So now the rate that we calculated here was the rate of 0.678 of direct material. So now this was our rate that we have calculated of direct material, and we have allocated that. And from here now we can go to the next overhead. The next overhead that we have is the power, and the power is 50,000 rands. Then obviously the power will be based on the kilowatts per hour. The power will be based on the kilowatts per hour. It will be based on kilowatts per hour. And the total of the power, as I have mentioned, is 50,000. Then we have to check in our table of allocation. Our kilowatts per hour, we had 200 for the total. We had 10,000 for tooling department. We have 9,000 for the assembly department, and we have 1,000 for the canteen department. So now the total of that is 20,000. As you can see, the 20,000 is the total of the kilowatts for all these three departments. So when we allocate this, we say power rate or power overhead rate, power overhead rate, and the power overhead rate is the overhead cost of 50,000 divided by the total base, and the total base is 20,000 kilowatts of electricity per hour. And we take our calculator and we say 50,000 divided by 20,000 kilowatts. That gives us £2.50 per kilowatts per hour. Then after we allocate that to tooling department, and the tooling department will be allocated £2.50 times by the number of kilowatts that were used in this department. And the number of kilowatts that were used in this department is 10,000 kilowatts. So we times it by 10,000 kilowatts times by 10,000 kilowatts, and that will be 25,000 of the amount to be allocated in the tooling department. And the assemble department, it will be £2.50 times by the number of kilowatts that were used in this department, and the kilowatts that were used in this department amounted to 9,000. There is the assembly department, 9,000. So we multiply by 9,000. Then we say £2.50 times by 9,000. This will be the allocation of 22,500. 22,500. Then in the canteen department, we allocate using the same rate, £2.50 times by 1,000 kilowatts of power. Then we say 2,250 times by 1,000, and that will be 2,500. So now I can allocate all the amounts to their respective departments. For tooling we have 25,000. For assembly we have 22,500, and for canteen is 2,500. Remember, we are still doing the primary allocation, or the first allocation, where we allocate all the overheads to all the departments using the relevant basis. Then we go to the next overhead, And the next overhead is rent of the premises. Then obviously the rent of the premises will be based on the floor space. It will be based on the floor space. Rent of premises is another overhead, and we write rent of premises, and it will be based on the area, or it just says square meter or meter square. And the total of the rent for the premises is 56,000 rands. Total of the rent 56,000, and we have to say rent rate, and the rate of rent will be 56,000 divided by the total space, and the total space is 46,000. That is the total space. So we divide by the total space 46,000. Then we say the cost of 56,000 divided by 46,000 will give us the rate of 1 rand 22 cents per square meter. Then we allocate that to the tooling department, and we say the rate is 1 rand 22 times by the square meters that was utilized by the tooling department, and the tooling department utilized 25,000 meters square. Then you multiply by 25,000 meters square times by 25,000 meters square. That gives us 30,435. 30,435. Then we allocate for the assembly department, and for the assembly department 1 rand 22 cents, which is from the 56,000 divide by 46,000 equal times by 25,000, and that's not 25,000. For the assembly department is 17,000 times by 17,000, and that gives us 20,696. 20,696. And the canteen department will be allocated the same 122 times. Please make sure that, guys, you take all the decimals, hence I always restart my calculations. 56,000 divided by 46,000, because I want to take all the decimals. Then we multiply by 4,000. The canteen only occupied 4,000 of the space in the building, times by 4,000. That is 4,870. 4,870 is the total to be allocated in the canteen department. So now I do the allocation. Tooling department, it get the share of 30,435. Assembly departments gets 20,696. 20,696. And canteen gets the portion or allocation of 4,870. Then now we have allocated this overhead. Then we can go to the next overhead. And the next overhead is the allocation of the depreciation of machine and equipment. And the depreciation of the machine and equipment is 85,000 rands in total. And the depreciation of the machine and equipment will be allocated using the value of the machine, because that is the machine. It is 85,000 depreciation of machine and equipment. Depreciation of the machine and equipment 85,000, and we'll use the value of the machine. We use the value of the machine, or the book value, and the total for that, it is given to be 85,000 rands, as we have seen, 85,000 rands. And the base to allocate is the value of the machine. Remember, always calculate your rates. Depreciation of machine plus equipment. It is the total of 85,000 rands divided by the total base, and the total base is the total value of all the machine and equipments in all the three departments, and the total is 500,000 rands. Divide by 500,000 rands. Then this will give us an amount of 85,000 rands. Divide by 500,000 rands, and it will give us 0.17, which is equal to 17% per machine. Then now we share that, or allocate that, to all the departments, and we say the tooling department will get a share of 17%, which is 0.17 times by 300,000 times by 300,000, and this is in rands, times by 300,000, and it will give us an amount of 51,000 rands. An amount of 51,000 rands. Then the assembly department is still 0.17 times by the value of the machine in the assembly department, which is 180,000. 0.17 multiply by 180,000 times by 180,000, and this gives us 30,600. And the canteen department, it will be 0.17 times by the value of the equipment and the machine in the canteen department, and their value was 20,000 rands, times by 20,000 rands, and that gives us 0.17 times by 20,000. This will be 3,400 rands. So now these are the amounts that we are allocating, the amounts that we have allocated to our respective departments. So now we go and we allocate the amounts. We have 51,000 under the tooling, 30,600 under the assembly, and 3,400 under the canteen department. Then we go to the other overhead, and we have to allocate that accurately using the correct base. And the next overhead is the salaries of the supervisors, which is 62,000 rands. Salaries of the supervising staff. Then obviously the supervisor get paid according to the number of employees that he supervises. If the supervisor has more employees or has many employees to supervise, then obviously his salary will also go up. But if you are supervising one person, then obviously your salary will not be too much. That is why the salary of the supervisor will be allocated using the base of the number of employees in each and every department. So now we write that salaries of supervisory staff. Let me just say supervisor. That will be based on the number of employees. Number of employees, and the total of the salary of the supervising staff, it is 62,000 rands in total. 62,000 rands. And we said that the base must be the number of employees in each department. So now let us calculate the rate, supervisory rate. Supervisory overhead rate. It will be 62,000 rands divided by the total number of employees in all the three departments. And the total number of employees in all the three departments is given to us as 130 employees. Total is 130. These are the number of employees, and their total is 130. And department tooling was 40 and assembly 80, and in the canteen we only had 10 employees, and the total is 130. So now we divide by the total 130, and that will give us the rate per employee. 62,000 divided by 130, it is 476 rand 92 cents per employee. That means a supervisor on average get paid 476 rand 96 cents per employee. Then we multiply by the number of employees that we had in the tooling department, and in the tooling department I mentioned that we have 40 employees. Then multiply that by 40, it gives us 19,076. That is 19,076, and it becomes 19,077. Then that is the allocation in the tooling department, which is 476.92 times by 40, and that gives us 19,076. Then we continue with the next one. 62,000 divided by 130. Then that is for the assembly department. Is 476.92 times by the number of employees in the assembly department, and the assembly department is 80 employees. We times by 80 times by 80, that gives us 38,154, round off to nearest rands. Then in the canteen department we apply the same rate of 476.92. Let me just go back. Then I multiply by the number of employees in the canteen department, and the number of employees in the canteen department is 10 employees. then multiply that by 10, it will be 4,769. 4,769. So now from here we can just allocate these amounts to their respective departments. The tooling department is allocated 19,076, assembly department allocated 38,154, and canteen department is allocated 4,769. Then we allocate that 19,076 and 38,154 and 4,769 is allocated for the canteen department. 4,769. So now from here we must allocate the last overhead. And the last overhead now that we have, as we are about to be done as soon, is heating and lighting, 33,000 rands. Heat and light. Heat and light is our last overhead. Heat and light is our last overhead. And our heat and light will be based on the floor space, which is the area in meter square. Why do we use that? It's because the light that you need in a property or in a building or in a warehouse, it depends on the space that is available. The bigger the space, the more heat you will need or the more light you will need. But if the space is very small, you need little light. So now that is why when it comes to heat and light, we use the floor space as the base to allocate this overhead. However, kilowatts will still not be incorrect if you use kilowatts to allocate this overhead. But the first priority or the most relevant overhead, which is the first priority, is the floor space. Then in the absence of the floor space, which is in meter square, then you can use the kilowatts to allocate heat and light, because at the end it consumes the electricity, of which the electricity is driven by the kilowatts. However, now we'll be using the 33,000 the kilowatts to allocate this to our overheads. So now we go again, we calculate our heat and light rate, our heat and light, and we say the total of the overhead 33,000 divided by the base, which is the floor space, and the floor space in total from all the departments is 46,000. That is 46,000 square meter. Then that will give us the rate, and our rate will be in rands. So now we say 33,000 divided by 46,000, and that will give us 0 rand 72 cents. Then we allocate that to the tooling department. And when we allocate that in the tooling department, we say our rate is 0.72 cents multiplied by the space used by the tooling department, and tooling department used 25,000 square meter. Then we multiply by 25,000 square meter. Then we just say multiply by 25,000 square meter, and this will be 17,935. That will be allocated to the tooling department as heat and light overhead cost. Then after we have assembly, and the assembly will be 0 rand 72 cents multiplied by the space used by the assembly department in this business. Then let me just reverse. So now we have that 0.72, we multiply by 17,000 meters square, multiply by 17,000 meters square. That gives us 12,196 cents. So now that is the amount that will be allocated in the assembly department for heat and light. Then the last one is canteen, and canteen will be allocated 0.72 cents multiplied by the space, which is 4,000 meters square. Then we say times by 4,000 meters square. That gives us 2,870. 2,870 will be allocated to the canteen department. Then now I go and allocate that overhead. For the first department, which is tooling, we have 17,935. 17,935. And the second one is 110 or 12,196. 12,196, and the last one is 2,870. So now these are the total overheads that have been allocated accurately to their respective departments. Then now we have to calculate, obviously the total of the total will be 466,000, because these are the overheads that we've been allocating. So for this total it will be 466,000 without any doubts. Then now we have to calculate all the overheads going down. Let me just do that so that I check if did I not do any mistake. 26,154 plus 50,893 plus 25,000 plus 30,435 plus 51,000 plus 19,076 plus 17,935. That is 22,506. 22,490. There's something wrong. Let us check again. 26,154 plus 5893 plus 3435 plus 51,000 plus 19,076 19,076 plus 17,935 17,935. That is 19,000. What is short here? 26,154 plus 50893 plus 25,000 plus 30,435 plus 51,000 plus 19,076 plus 17,935. Okay, there we go. So we have our total as 220 493 220 493 220 493. The second one is 52 308 plus 44 107 plus 22500 plus 20696 plus 30600 plus 38154 plus 12,096 12,196 22,561. Although there's the rounding off. 22,561. We have 6538 plus 2500 plus 48 70 plus 3400 plus 4769 plus 2870 24,947. That is correct. 24,947. So now these are the totals of our overheads that we have. So now that was requirement number 1 and requirement number 2 that we have just, or requirement number 1 that we have covered here, which is 2.2.1. Show all the apportionment of product overhead costs for each of the 3 departments. And 2.2.2 says show the apportionment of the canteen cost to the production departments. So now in other words, we are reallocating our overheads of the canteen to the main departments. So now we are doing what is called normally primary allocation. So the secondary allocation, because we have done primary allocation. So now secondary allocation is the reallocation of the service department to the main departments. So now we are doing that reallocation where we take our canteen of 24,947 and we allocate it to all other departments. And that will be, here we have the total. Here we have the total. We have the total of the overhead. Then now we are allocating canteen. We are allocating canteen. And now we have to allocate our canteen using the base that is from the bases that are given. So now let us go and check which base will be relevant to allocate our canteen. We have direct material not relevant, number of employees will be relevant, direct labor kilowatts not relevant, machine not relevant, floor space not relevant. Because we are allocating canteen, then the relevant base will be the number of employees, because the more employees we have, the more cost will be incurred in terms of or from the canteen department. So now we'll allocate this using the number of employees, because the floor space has nothing to do with the canteen cost. The book value of the machine has nothing to do with the canteen. The kilowatts has nothing to do with the canteen. Labor hours has nothing to do. Material has nothing to do. Direct material also has nothing to do with the canteen. So now the relevant base that will be good to allocate is the number of employees. So now when we allocate this canteen, we'll use the number of employees. So now we do the same thing as we did previously. We calculate our canteen rate. And our canteen rate is 24,947 divided by the total of the employees in the two departments. Remember, now we don't include the canteen anymore. So we calculate the total of the two, which will be 120. We divide by 120 employees. Then after we have done that, it will be 24,947 divided by 120. Then it will give us 207.89. Multiply that by 40 employees in the tooling department is 8,316 that will be allocated. 8,316 that will be allocated to tooling department. It will be 207.89 times by 40. That will be 8,316. Then in the assembly department, we say 207.89 times by 80 employees. Then we do the same thing. We multiply by 80 employees. It gives us 16,631. 16,631 that will be allocated to the assembly department, and 8,316 that will be allocated to the tooling department. Then this is the secondary allocation, where we allocate our service department to the main department. 16,000 is for the assembly. 16,000. Let me just check here. 16,000. $16,631, and we have 8,316. Then after, now we add the two. We have 16,631 plus 22,561, which is the total amount just above. Then that will give us the total overhead. That will give us the total overhead as 237,192. 237,192. 237,192. Then we calculate the second one, 8,316 plus 22,0493. That will give us 228,809. 228,809. 228,809. So now this will be our total overhead cost. This will be our total overhead cost after the secondary allocation. So now we have done the second requirement, which is 2.2.1. That was requirement 2.2.1 that we have covered, where we have reallocated the canteen, being the service department, to other departments. Therefore, now we are required to do 2.2.3. That was 2.2.2, 2.2.1 is done. Then we are doing 2.2.3 now. 2.2.2 is this one. This is 2.2.2. That is the requirement. From here until the end here, this whole part is under 2.2.1. So that I just wanted to get clarity in terms of where we are and what we are doing. So now the third requirement is, for each production department, calculate the overhead cost rate based on labor hours, which can be used to absorb overheads cost into the job. So now we are calculating the overall recovery rate for each department. So now we have to calculate overhead rate or overhead cost rate for department tooling and for department assembly. So now we start by tooling department. Tooling, and under tooling department we are calculating overhead. We are calculating overhead using labor hours. Overhead cost rate, and we know that it is based on labor hours. Just take note of that. Labor hours. And our cost, total overhead cost for this department is 228,809. Divide by the total labor hours for this department only, because we are calculating for the department. Our labor hours, they said if it is based on labor hours, here we have our labor hours, and labor hours for tooling department is 8,000. So we need the rate. Then we divide by 8,000 hours. That will give us the rate. Then we show our calculator and we say 228,809 divided by 8,000, and it's 28 rand 60 cents. 28 rand 60 cents per labor hour. Per labor hour. Then that is the overhead rate for the tooling department. And we do the assembly department. We do the assembly department. And the assembly department is also based on labor hours. Assembly. And we are using labor hours as a base. It's important to highlight that. Our labor hours for the tooling department, we are calculating overhead rate or overhead cost rate, And our total overhead for the assembly department, our total overhead for the assembly department is given. There is the total overhead for the assembly department. Assembly department, there is the total 237,192. 237,192. Divide by the base, and the base is labor hours, and the labor hours for this department is 16,000. Labor hours is 16,000. Here we have our labor hours. Here is our labor hours, 16,000 for the assembly department, yes. So we divide by 16,000 hours. Then we calculate that. Then we say 237,192 divided by 16,000, and that gives us 14 rand 82 cents per labor hour. Per labor hour. And that is our overhead rate. Now from here, let us check the last requirement. What are we required to do? We did 2.2.3 just now. 2.2.3. This is 2.2.3, and it ends here. So this is the requirement that we have just completed. The next one, now we are required to calculate the overhead cost of producing one standard garage if it spends 10 hours in the tooling department and 15 hours in the assembly department. So now we have to calculate the cost per unit. And remember, in calculating the cost per unit, you need direct material, you need direct labor, you need overheads. So now we already have our overhead rate, and we know how much is our overhead rate, as we have calculated that it is 28 rand 60. So we'll just have to say times by 28 rand 60 here. Then we get our overhead cost per unit, and here we'll have to multiply by 14 rand 82 cents if I'm not mistaken, because we already have the rate, and this rate are per labor hour. And we are already given the number of hours it will take to complete one unit in the tooling department or one garage, and also the number of labor hours it takes to complete one garage or unit of a garage in the assembly department. So now we need the direct material cost per unit, and we need the direct labor cost per unit. And we fortunately do have direct material cost per unit as 1,000 and 1,500. And we also know the direct labor, that it takes 15 hours and employees are paid 100 rand to complete one garage of standard frame, and it takes 20 hours to complete one garage of Urex, and employees are paid 100 rands. So now we want to calculate the total cost of completing one garage. So now let us just go to that, which is that is requirement 2.2.4, I think so. We are doing 2.2.4, yes. Then now we calculating standard frame and Urex garage. Standard frame and Urex garage. Then now we have to calculate the cost for the units, standard, and we have standard and Urex. garage, standard and Durex. Looking for the total cost to complete these products. We need direct material, and we need direct labor. Then after, we'll also take into account the overheads. So now we take that into account. Then when we take that into account, we say our direct material is given to be 1000 direct. Okay, it says the specification for each customer for each type of garage are as follows. Standard. Okay, which garage are we doing in the requirement? Okay, calculate the overhead cost for producing one standard. Okay, we are not doing the Durex, only one standard. We are only doing the standard garage. Durex is not required, only the standard garage. So now the cost of material for the standard is given to be 1000. That is the cost of the material, 1000. And the cost of labor will be 15 by 100. It will give us definitely 1500, because employees are paid 100 rand and it takes 15 hours to complete the job. Then after, we have overheads. Our overheads, remember, they go through the two departments. We have overheads that are coming from the tooling department. We have overheads that come from the assembly department. And the overhead rate in the tooling department is 28 rand. Is 28 rand. We have calculated that is 28 rand 60 cents, and it's based on labor hours, and we know that it takes 15 hours to complete the standard garage. It takes 15 and 10. So now for the tooling department it's 10 hours, and for the assembly is 15. Meaning now we just say 28 rand 60 cents. 28 rand 60 cents. We multiply that by 10. And for the assembly, we have the rate per labor hour, 14 rand 82 cents. 14 rand 82 cents. We multiply that by the number of hours, and the number of hours is 15 hours that the standard garage takes to be completed in the assembly department. So we multiply also that. Then the total is 14. We already have 14 rand 82. We multiply that by 15. It gives us 222 rand. It gives us 222 rand 30 cents. 222 30 cents. Okay, let us check if the decimals were not supposed to be removed. When we calculated this previous course, we need all the decimals. We said 237192 divide by 16,000, then multiply by 15. Yes, please take all the decimals, guys, if you still need to use the amount in the future. So now that is why I have to go back to the original amount. Then we have 222 rand 38 cents. That is 37 cents. 37 cents. Then the next one, we go to the first calculation. The first calculation of the overhead rate in the tooling department, we set 228,809 divided by 8,000. That gave us the rate, and we multiply the rate by 10, which is what we are doing here now. Multiply the rate by 10, and that gives us 286.01. 286.01. Then our total overheads will be 286.01 plus 222.37, 508.38. Our overhead total will be 508.38. So now our total overhead per unit will be the total here at the bottom, and that total will be calculated by saying 508.38 plus 1,000 of direct material plus 1,500 of direct labor, and it will be 3,008 rand 38 cents. It will be 508.38 plus 1,000 plus 1,500. Okay, 30 or 300.38. Then we have 300.38. Now we have definitely answered the requirement, which was instructing us to calculate the overhead cost of producing one standard garage if it spends 10 hours in tooling. And okay, we're only required to calculate the overhead cost, not the total cost per unit. Sorry for that, the overhead cost. So now what is needed was only this amount. So this is the amount that they were looking for. So that is the amount that they were looking for. Then this will be the total cost per unit if it was required. This will be the total cost per unit, but this is what was required. Okay guys, with that being said, I am done with this exercise. Thank you.